Well, well, well. I mean, it's not that bad, is it? It's only coming back to the wick. Don't lose your brains. It's only down to 95,000. That's still a good run. Come on, man. Don't worry, there's no FUD in tonight's live stream. God forbid you would ever want Bitcoin to be cheap. You only want it to be expensive because you only want to pay the highest possible price for Bitcoin. So that when it does hit $1 million, you're there saying, please, can I buy it? Because I'm the dude that wants to stay with the diamond hands, and I'm Michael Saylor. Yes, you are. Ladies and gentlemen, welcome to tonight's live. Seems like we've had a little bit of a tumblr to the downside. Had some very interesting comments on the live stream earlier on today. A brilliant gentleman was like, see, you misled your subscribers. Now Bitcoin's back above 100K. Probably spent about 3 minutes above 100K. Then it rolled over. So I don't know where your thoughts are now, my bro. It's doing really well right now. It's going at a discount. So you might be able to get some cheap Bitcoin right now. Jokes aside, ladies and gentlemen, this is what happens in the markets. It goes up and it goes down. Are we bullish? Are we bearish? Doesn't matter really, because we want movement, okay? And when there is movement, there's money to be made. And if you're here to make money, then these sort of moves can actually work out to be quite profitable. If you're here to just collect Bitcoin, that's still good as well, you know? You can be like Michael Saylor. Never sell it. You ain't ever making money. Now, unless you decide to create a fund and go and borrow lots of money on the back of the amount of Bitcoin you've accumulated, no problem. But at least do something with it. Let's get to the program, ladies and gentlemen, understand exactly what we mean by the greatest bubble in US history. I mean, who said that? You notice it's inverted commas up there. Get with the program, guys. So, what we got? Bitcoin, huh? Nice little flavorsome move to the downside. Now, before we get into the topic, let's understand what had happened with this move. Now, the guys in the Platinum membership, they were already prepared for this short to the downside with Bitcoin. Shared it out this morning. And they've, of course, I wanted the 95,951. We saw a little bit of reversal just above the 100,000 region. And then, of course, bang, straight down to 95. Well, we want to see 95,951. And we got 94,155 before the reversal. Happy days. So those guys, I know those guys made money. Quickly going over to Ethereum shorts. We wanted to see Ethereum take a little bit of a tumbler to the downside. As it stands right now, Ethereum is currently heading towards our TP, I believe. All you ETH traders, where you at? Down nearly 10. Yep, there she goes. So we wanted to see Ethereum come down and clear the 3,679. We've now managed to see the 3,508. That's not bad. And it was a simple logic as well. It was, as long as price stays below the 50 EMA, then we're looking for shorts to the downside on Ethereum. So happy days right there. The guys made a little bit of change on that. Solana, same story. We want to see $214.90. And then we ended up seeing Solana to just go down. It just completely wept the range and just said, nope, we just want prices to be cheaper. It's not bearish. It's actually, there's a great opportunity for reversals to come into play. But I don't think they're going to happen just yet, guys. I mean, we got CPI data coming out this week. And then, of course, this stuff that's hitting the marketplace. The rally is now stalled, like it's been paused because of what's maybe going on with NVIDIA. Quickly going over to a NASDAQ to break it all down for you. NASDAQ said, okay, let's take a little bit of a tumble to the downside today. So the sell button appears to be working. I was of the impression that the sell button was going to be working today on the NASDAQ because we shared this setup. Saw a little bit of a retrace back up to 21,662 is what we wanted to see them come back down to 21,537. And NASDAQ has now done the job and come to 21,435. So the guys that played the shorts, congratulations on that little bit of flavor with the NASDAQ. Is that daily open right there? Yeah. So the retrace came into play on the daily open at 21,649. We wanted to see 21,662. So that would have been a decent entry. If you did take the short from around that range, you would have seen some nice flavor to the downside. So NVIDIA getting probed, like China's not happy with their dominance in the marketplace. But given that NVIDIA hasn't done too bad, it's only gapped down. It's still at $138 a share. Now, remember, he's going to be doing he's going to be at a key speaker event very soon, the CEO of NVIDIA. And that's going to really bring some volatility, which leads me over to tonight's story about the biggest credit bubble in history. Check this out. So, as it stands right now, we've got this article from dearly beloved Mike. What's going on? The mother of all bubbles in the US is sucking money away from the rest of the world, a market expert says. So what are we talking about here? Well, effectively, the US is literally taking on all of the money from all over the world. Around 70% of the world's equity is now sat in the US. Okay, so you look at that, man. Like, everyone's just coming over here, and all the countries, the emerging markets, no one's going over there. No one's investing with it. Look at China, man. No one's interested in China, and they're trying to add liquidity to the marketplace to make investors come to China and put their money there. They're not interested. They're all going to the US. Well, let's just have a look at something. Let's see where our US debt clock is right now. Are we gaining? Are we reducing? I mean, here we go. 36,210,457,000,000 something thousand, whatever. All right. How many of you American citizens? You all owe $271,790. How about that? You try and go into the new year with debt free, and you've already got that on your head. So yeah, that's what you are costing the United States. But it's not your fault. If you had a choice to not send money and fund wars, then you would say, nope, that probably would be significantly lower. So we'll get onto another topic about that at another time. But what am I talking about with this? Every time anyone mentions anything about a bubble in the marketplace, it's either going to be a credit bubble, is it going to be a technological bubble, like remember the dot-com booms and what have you? But in this article right here, it goes on to talk about that the market is, the actual bubble that we could be going into is one of the credit environment. So we know where we are with the credit. Household credits are just going to the moon right now. MasterCard owns 80% of the credit out there. Okay, and that's to the sum of $1.17 trillion. And with this tariff thing that Trump's trying to put into play, about 10% cap on interest rates on credit cards, that's going to really cause a bit of a problem for those guys. So that's where we could end up going. However, just for the guys who are like, this guy is always negative, man, he's fudding. Oh, you can't handle truth, my bro. This game is a cutthroat business, a dog-eat-dog world. And if you're complaining about price going down, you don't get the game. You really don't. Step away from it, because you're going to last 5 minutes. You'll be fed to the whatever. You might even be sleeping with the fishes. And that'll be a very polite way of saying that you are, if you get into this game with that mindset. Sorry about the hard truths, ladies and gentlemen, but let's get with the reality of it all. Here's the public debt, the public debt and the federal deficit versus gold's price. What do you see? You see these green bars right here? No good, okay? So for every dollar that the United States earns, it owes 128% on top. So you're already at a problem, okay? That could justify the credit being a bit of a problem. The more credit keeps on getting borrowed, and then what's going to happen, okay? Look at gold's price. Naturally, when fiat starts to become a less trustworthy environment and the interest rates start to come down in the US, what happens? Investors are like, hey, man, I'm going to be sitting in this stupid-ass dollar. Get over to gold, man. There's no point in holding dollars. It's going to lose its value. Even though we are already 20% behind its actual purchasing power, I'm going to get myself over to gold. To touch on top of that, you got hype coming up right now in Syria, so that's naturally going to be fueling safe haven investors to think, you know what? Things are looking pretty bad. There's another war, and it's starting to get a little bit crazy right now. They're going to start going over to gold. That would probably pretty much explain why gold is now peaked out at a high of 2,676. We were looking for gold to make a move to the upside today. Let me be honest with you all. Yeah, we were looking for gold to come down and take the 2,666 region. Instead, we got the 2,676. So we hit the projection. Happy days. We want to see a little bit of a reversal. But if the guys jumped onto the volatility to see the recovery of the red vector candle region, happy days to the upside in that sense. But this is what's making investors get a little bit concerned. However, yes, I have got a black swan on my thumbnail. I'm sorry for all the guys who don't like the negative story, but it's not. But I've got your attention. Check this chart out right here. What's this? I'll read it to you. This is a chart that shows you The chances that we are going into a bubble, okay, it says here, identifying signs of a stock market bubble coming into play. So it basically says the indicator can be used to assess willingness to borrow for investments. Elevated margin debt levels suggest retail investors are flooding in, which means a bubble might be forming quietly and the likelihood of overvaluation in the stock market is increasing. No bubble. In other words, when it gets to a darker shade of red, that would then be consistent with potential bubbles. Okay? COVID was here. Then it came all the way up. Then we've seen the correction in 2021, 22. The wars, Russia, and all that issue, Biden economics and all that madness. Okay? Over here, 2007, 2008 subprime mortgage crisis, the dot-com bubble all the way over there. 2018, 2017 crash. Remember that? So it's a 2017, 2018 crash. You know what I mean? With the FDIC, with the unrealized gains and losses for banks. 2018, it was 252 billion. The market crashed. But in 2024, it's 516 billion and the market's going up. Okay. That makes sense, doesn't it? So the chart effectively tells you that we're not in an area of a bubble, and you'll get analysts like this that will come out with stories about, yeah, maybe it is a bubble we're going to go into. However, you've got same analysts turning around saying that maybe the S&P and the NASDAQ are still being primed to continue higher, with an S&P going to around 7,000. Wow. Damn. What else can it do? Look at this. Treasury Department says Bitcoin being used as digital gold. It's like, yeah, man, they're coming to the idea of it all. And then this dude right here comes up and says, stop it. It's a national security threat. So in other words, his problem is everyone's plowing money into Bitcoin and they're forgetting other industries. Well, other industries are a little bit slow. We need that volatility. We need that stuff in our veins. We need that movement. And that's why when you ask me, Tino, are you bearish or you bullish? And I have no interest in what a bear or a bull's going to do. Aesthetically, those pictures look nice. That's it. There is no significance. I don't wake up in the morning and look at them and think, could we be bearish? Could we be bullish? No, I'm looking for movement, ladies and gentlemen. If I think it's going to go up, it goes up. If you're sat there thinking about it bullish, I'm getting ready to sell into you. And if you're sat there thinking about it being bearish, I'm like, give me your liquidity. I'll take it from you. Sell it. Send it my way. How do you think I was able to get XRP to the moon? And, you know, I got you guys to get involved and sell it so that I could, buy it so I could sell it, and all that. I'm joking. No, but I'm really joking. That coin will go to 50 cents. So I'll start buying again around that region. Nonetheless, ladies and gentlemen, jokes aside, he's now saying that Bitcoin is being it's a waste of time. Okay, going into other analytics for Bitcoin, Coinbase Premium Index is coming down a little bit. Might be down a little bit more, given that Bitcoin's price right now has taken a little bit of a shoe bag and it's come back into the vector candle recovery, which would only be explaining that the market could be getting ready for this week's data. CPI, they're expecting it to come down. Well, you think that if there is an anticipation that inflation's going to go up, you think they're going to keep raising Bitcoin's price? Come on. Do you honestly think they'll do that? If they think that inflation's going to go up, then naturally that means there's a problem on the dollar. That could mean that the Fed, even though they're saying that they're going to cut the interest rates, if they get a reading way above 2.7%, which is what this is saying right here, and the core price, month on month, core price, the CPI right there, that's what they look for. That's for the changes in prices of goods, okay? If that goes up, then we know inflation's going to go back up again, and they're even saying that inflation's going to be moving up. So, ladies and gentlemen, when Bitcoin drops down to the downside like this, welcome it. It's good news. It's not FUD, all right, maybe BlackRock selling a lot of Bitcoin, there's no problem. And listen, some people are like, look, they're just moving the money. All right, they're moving the money, okay. So fundamentally, whatever they're doing, moving the money, if you're selling 200,000 ETFs, who's doing that? Your investors. It's Monday morning, they've woken up, they've seen the madness in the news, and they're like, you know what, we want to place some orders, or even the weekend. They were like, okay, this is not looking good in out of hours markets, putting sell orders in. And it's led to this behavior right here. So again, we might be a little bit concerned about Bitcoin's price action. And everybody's like, you know what? Oh, sorry, now Bitcoin's going to the downside, 30K Bitcoin. All right, let's just put things into perspective for a second. Here's the bid and the offers of Bitcoin. And these are the limit orders, real-time order book for Binance, okay? Now, you can see here that we've got quite a significant amount of bids sat at this price point right here. Got a big bid order right there for around total quantity of 8.83 thousand bids, okay? That's a big bid range at around the 90,000 mark, okay? Going further down, we've got another set of bids here at 18,000, which sits at 68,330. Let's be realistic with our expectations, ladies and gentlemen. Go to the daily time frame and have a look at this. What did we say about Bitcoin and the 5 and the 13 EMA? So this candlestick, in principle, needs to try and get back up above the 13 EMA by the end of the day. We've got 2 hours and 40 minutes for this to actually close above the 13 EMA, which is this red line right here. If it cannot close above that point, then technically we would make the assumption that the start of the next candle would effectively lead Bitcoin back into the vector candle, sorry, the recovery of the wick. They've recovered one of the wicks. There's another wick right here. So the logic would say that if they recover that wick, price should sustain itself and then try and move itself back up again to recover this wick. What day could that come on? It could come on CPI. Who knows? But we've got wonderful events coming up, guys. We've got the FOMC. So you're going to want Bitcoin to be cheaper if it's going to go to these significant price projections at these significant highs. Remember, looking at this logic here, it looks like we're heading into what could be a bubble, but we're not there yet. If my thumbnail caught your attention, happy days. But I'm here to tell you that according to this is saying that retail money is flooding into the marketplace. That is true. Let's have a look at some sentiment charts. What's this? Smart money, dumb money. Look what's going on. Retail is actually below the extreme. Smart money is coming up. So when this blue line starts to climb, it means that smart money is effectively buying on the way down. Okay? So they're preparing for the next peak. What do I mean by the next peak? Well, just look at Bitcoin. Okay? Spend all this time preparing for this peak. It explodes from that point. Look at the NASDAQ when it goes up and down, when it takes out the highs. They correct all the way down here. They prepare for the next peak. And then look, they've just broken that point, which is why they are saying that the NASDAQ's going to end up going above 22,000 and the S&P is going to go above 6,700 or even 7,000 itself. Okay, they have to prepare price. So when we go over to Bitcoin and understand what's going on there, they have to prepare price. Come on, guys, since what? We've not actually had a real touch of the 50 EMA from Bitcoin since October the 11th. You can't complain about this. And if you've made money on this move, congratulations. If you're going to be the guy that's buying up here, uncongratulations. That's what I have to say for you, to you. And that's just such terrible vocabulary. But anyways, let's have a look at other assets. Here we go. Ethereum. She tapped that 4K and she's now come back down. Vector candle recovery. She's come back into the wicks on the 1 hour time frame. Let's have a look. There she is, back down to that nasty wick. But it structurally looks like it's doing all right in this range. It's not that bad. It's just a nice sharp correction. We've got a lot of volatility coming into the market with the CPI data. Logic would say we would expect them to just bring it down to bring it back up again. So just take your time with it all and don't lose your brains. Any questions, ladies and gentlemen, before we get into it? Okay, so 715 votes. Wonderful. You all want crypto analysis. That's great news. How many of you want the like button to work as well? That's 224 likes. That's sad. Never mind. Any questions? I've got no idea what's going on. I just bought a house. Congratulations, bro. Tino, look at Solana. What's happening with Solana? It's all right, man. It's all right. 200. Yeah, standard. We're all right with that. Don't worry about Solana. Look at how fast they're coming down to move up, guys. This is just a sweep of the liquidity. You just go into the chart here. Look, I mean, come on, man. I mean, look at these bids, man. And the 15 million bid at 94,067. Did they take it? 94.67. Please tell me they took that bid. Oh, man. That is so, that is sweet and sour at the same time. Oh, my God. Oh, God. Tino is saying, here we go. Can you please help? I'm still trying to figure out how many you flipping joker. You always grab me with this, bruv. Every single time. You funny guy. You always do it to me, man. How many gaps did we fill today? Actually, let's have a look. The ETF did actually have some gaps filling. Here we go. So we've... You people are nasty, man. We've got another gap down here that could be a bit of a problem for us. So just be very mindful of that. Okay. Got another gap up here that could be mindful for us, but just be mindful. We got another gap down here. That gap would be, and this is not like a CME gap, it's an ETF gap. So it's just based on the frequency of buying and selling there. You know, it's just, I mean, yeah, it's a little bit cheaper than what it is. That could lead Bitcoin lower. Let's just quickly go and have a look at MicroStrategy. Let's see where their heads are at right now. They're doing great, you know, still at 365, not bad, still behaving like Bitcoin. Got a red vector candle region up there, which I expect them to come back into. The Ponzi scam stock, but anyway, who cares about that? Quickly going over into another asset. I just want to look at Google because that did relatively well today. Closed off on that gap region right there. And then, of course, Apple's been doing all right. See what I mean? Tech stocks are just smacking it. Microsoft's done reasonably well. NVIDIA's, look, everything's mixed across the board. Tesla, killing it. Tesla's killing it. Never mind. That's all good. Any other questions? Here we go. Why is everything crashing right now in crypto? Maybe that could help us over here. Well, the Japanese yen seems to be holding out relatively well. The dollar dominance seems to be consolidating inside of this range right now. 5% on the dollar, 5.8% on the dollar. The 2-year yield is up by 0.56%. Not bad after a nice little sweep lower on the Friday with non-farm payrolls, with the expectation that Fed has nothing to worry about the U.S. economy. It doesn't. If your employment market's looking good, they don't need to care about anything else. And that's the truth. Unless employment rate goes up, which means that inflation could effectively climb up, forcing people to get unemployed, that's when you're going to have that happy medium. That's when you're going to have the Fed saying, okay, cut the interest rates. Let's start stimulating the economy. Let's get people back to work. Let's get companies borrowing money again. Let's get these yields down. Let's get people putting the money into the bonds so we can put that money to work. That's another story. Anyway. So, come on. Can you look at Bitcoin dominance? Yes, we can. Let's have a look at Bitcoin dominance. How long we got? Here we go. Cool. Okay, so Bitcoin dominance took a nice little spikeroo to the upside just now. Problem I've got with this is too much of a quick move. That's the problem I've got. It's a nice sweep lower to come back into play. I'm looking at the USDT dominance. Yeah, these fluctuations could be just preparing price for this week's data. And that's what it could be, ladies and gentlemen. Just getting ready for that. 1 billion liquidated in the last hour. Question, speaking of gaps, how long will they go unfilled until you forget about them getting filled? A month, 3 months? You know what? 1776 red. Listen, don't worry too much about the duration of a gap being filled. I mean, if it's really far away, it's far away. You don't need to pay attention to it. That's like looking at Bitcoin over here. Okay, look at this. We've got Bitcoin on the daily time frame. Okay, where are the vectors on the time frame? We've got this green vector candle region down here between 80,520 and you've got an 88,734. Do I need to worry about it now? Well, I might as well pay attention to it because it's not too far away. Well, let's look at this green vector candle down here at 64,000. It's quite far away. I ain't got to worry about it until Bitcoin at least breaks 76. I've got to look at it and say, what fluctuations can Bitcoin perform and be realistic with it? What could happen to Bitcoin in one day? It can move up 10%. It can drop 4 or 5%. Okay, it's down 4% right now. So I look at that and say, in relation to the vector candle that's close by, how likely could Bitcoin come down to 64,000 from this point? Something manic would have to happen for Bitcoin to do that. And that would effectively lead Bitcoin from that point to drop down all the way to this vector. That would give us a 34% correction. Do I need to consider that? Even over 2 days, do I need to even consider that candlestick? No, I don't need to care about it. That will take a little while for Bitcoin to go down. That's a lot of price action to take into consideration. If Bitcoin comes to 76,000, okay, then I look at that and I say to myself, okay, 76,000 from there, going down to that point, that's a 16%. Yeah, that's a 16% move to the downside. That's something that I can work with. Why? Because in 2 days, they could clear 4% and 3%. That's 7%. I'm halfway through it. Okay. So don't worry too much about gaps that are not close by. Okay, you've got this ETF gap right here. You've got a gap right there on the ETF. That's not too far. Okay, so let's look at the price action on the ETF itself. So the close of that candlestick, hypothetically, That gives us a 4% move to the downside. Today, they dropped 5.31%. Now, if we're going into data tomorrow, so that means Tuesday, we've got Bank of Australia coming out with something, and then you've got China's new loans rates and whatever's going on over there. You've got the OPEC meetings. I'm not too fussed about tomorrow because there's no real news for me to really trade on that logic or be aware of, okay? So really, the market's going to do what it did today, just going to move for us. And we're going to try and put narratives together and assume, yeah, maybe it's because of this, maybe it's because of that. No, they're getting ready for this data right here. And then you've got a press conference in the Canadian dollar itself, which is going to have an impact on oil, ironically. OPEC speaks, then Bank of Canada, who happens to be the largest export of foreign US oil, okay? The largest one. OPEC talks. Then they're going to reveal exactly what the story is with those guys in terms of the interest rate. So just be mindful of that, guys. Look at USD CAD. Any of you trading Forex, pay attention to USD CAD at that time and pay attention to oil at that time. If it's good for the Canadian dollar, the US dollar will go down against the Canadian dollar and oil technically will be rising, which is good news for Canada, okay? If it's the other way around and it's bad, that means USD CAD goes up, we're a favor for the dollar, and then oil's price technically goes down. So just take that into consideration. Can you guide about gold further? Where do we see gold as news also up and coming? So what move are we expecting? You've got to understand gold is reacting to this information right here regarding Syria. Okay. That's what it's reacting to right now. We quickly go over to gold itself and then we look at the idea that is gold going to be, well, is Bitcoin better than gold? Well, yeah, it looks like Bitcoin is better than gold purely because of what's going on this story here. Okay. The problem is we see articles like this and we say, yep, okay, the Bitcoin is digital gold right now. So they're touting, as it says, the idea that Bitcoin is now becoming a value, a store of value, because that's what gold is. But frankly, when I look at gold, I say to myself, what's going on? What's going to make an investor trigger the idea of safety? I look at these red vector candles, gold's going back to them. And that's going to be revealed based on how they perform in this range right here. CPI data, if it comes in higher, that means that's good news for gold because it's bad for the US dollar. At the same time, it also means that they're going to potentially cutting the interest rates. Well, they've declared they're cutting the interest rates. So that means the yield on the dollar is going to be coming down, which naturally forces investors to go back into gold because the yield on the dollar ain't good. And it's already getting inflation. And what's the point in holding dollars? So I might as well get my dollars and put them to work. Given it's now 5.8% appreciated, I can buy more gold on the back of a strong dollar. Strong dollar. Any other questions, guys, before we end the live? Whilst we're doing that, guys, make sure you check out BTCC. We didn't take any more trades today. This is just an overview of what I did yesterday and today. Those were today's gains. For anyone that hasn't seen that one, I paid a little bit on fees on that. So it wasn't truly $321. All right, so it's $221. But our Bitcoin long from this morning, which I did close prematurely on the live, entry at 98,131 and 99 and 98 was the closing price. If I can get $1,000 move on Bitcoin, I'm laughing. Like that's a nice little $2,949. Happy days. Lots of leverage there, but I'm not alien to leverage. And this was the Ethereum trade over the weekend as well. $3,122 for anyone that hasn't seen it from today's live earlier on. Then we took a little bit of a shoe bag on a loss on Ethereum right there, where we lost $1,300. But I'd say over the last couple of days, we've done good. So we'll be getting ready for some flavor with these vectors, which I will be talking about very shortly with the Platinum members. So with that being said, the Black Swan, it's not coming yet, and we're not in a bubble at all, according to that information. So with regards to Bitcoin, remember to pay attention to the daily time frame 13 EMA. Just make sure that price can close above that point. Expect the wick to come and recover a little bit going into tomorrow. And then tomorrow, if they decide to do the same thing again, well, just make sure you're paying yourselves on any of your longs. And if you're going to play any shorts, make sure you keep it light and make sure that you can manage it. And I'll be checking in with you all tomorrow. Hit the like button, gang. And I'll be checking in with you all. What a guy repeated himself. Clown-like movements.